The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials up 200, NASDAQ up 89, S&P's up 18.5. Gold contract down $11.70, trading at $16.38 an ounce. We get silver down 32 cents, $17.89 an ounce. Light sweet crude up 25 cents, $50.15 a barrel. Notes and bonds. You get the 10-year down 6 ticks, 132.30. The 30 off a half a point off 15 ticks at 167.07. King dollar up 231 ticks, trading 99.199. Euros at 108. Yen is at 110.5, and the pound is at 129 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Wednesday morning. How we doing?
We're doing good, man. We got a little bounce in the marketplace here.
We sure do, and then we have a little pullback after that already in the S&Ps, right? Some volatility in both directions, but the low at 4 in the morning, pretty remarkable. The Dow was up almost 700 points, I think, from that low.
That's pretty wild, man.
Yeah.
So, here, let's take a look at the European markets for a second, folks, because what you're going to see out here is that the European markets basically started the bounce going, and it's quite a bounce, man, in Europe. You know, if you take a look at the DAX, well, just as you said with the Dow, Tom, too. So let's take a look at the DAX. The DAX was down to a low of 12,368, and now you're 12,788. You know,
huge, yeah.
It's a big number. The FTSE, you take a look at the FTSE in the UK, you're getting the same type of setup. FTSE got down to 68.71, and now you're at 7,003. Now, that being said, folks, okay, bottom line, we'll see where this shakes out the rest of the day. I do think we're going to stay higher and get a little bounce going. We'll see how this volume comes in. We're going to go to Toll Brothers. So check this out, folks. We got to see what's going on here because you get a housing market that is doing well, but guess what? Toll Brothers just come out with numbers, and this thing is slammed. Down $5.21, 39.08. We take a look at this chart, and it looks like they're never selling houses.
Oh boy!
Look at this. So yesterday, of course, was went down 47 to 44. You're down $5. So let's see what they missed out here. Well, first off, I want to look at this because I think this is the California deal. Okay, luxury houses, several regions of the United States. Company builds customized single family. Yeah, that's it. Okay, that's what I wanted to see. So what you have here, folks, is this: their average selling price is $850,000. This is like it is what it is.
Okay.
But that's
for sure.
That's what I wanted to see as to what their market actually is. Okay, so now let's see, which one am I going to hit here? Plunges, Toll Brothers. Okay, so Toll Brothers reported quarterly sales and profit that missed estimates. Earnings per share amounted to 41 cents, while average estimate was 45. Revenue, $1.3 billion, missing the $1.4 billion estimate.
That's a huge miss.
It's a huge miss. It's particularly a huge miss in the housing market, too, folks, because what ends up happening is that they pre-sell the houses, so they should have a clear understanding of what they can close when they can close it. Do you know what I'm saying, going forward?
Yeah, I mean, that's $150 million in 90 days that they missed by... And only 10%.
Right. They're saying that the expensive homes puts it at a disadvantage. Well, it depends what markets they're in. I think they're big in California, too. So let's see what that's doing to the rest of the... I'm just curious as to what it's doing to the rest of that area. Because with interest rates, bottom line is that they should be getting some traction here, folks. Okay, so let's go to Taylor Morrison. That's down 86 tenths. TMHC. Okay, so this is closer to its highs. That came down too, though. That came down too. Yeah. And I want to go back to Toll one more time because it looked like at the end they were trying to save themselves, saying that the sales are up dramatically for the... Okay, so the market has improved since the contracts for those sales were signed. Purchase agreements in the current quarter jumped 31% from a year earlier. Hey, we'll see. And in this environment, they shouldn't have missed. That's the real bottom line.
Sure.
No doubt. Let's go inside the NDX 100 and take a look at the strength versus the weakness. You get Netflix up 3.7%, Lam Research up 2.7%, Mercado Libre up 2.7%, and Micron up 2.6%. Taken away from it, Tesla. Tesla's down 1.8%, United down 1.6%. The airlines, man, have just got smoked between United and
they
America.
sure have.
Yeah. And we go over to the Dow Industrials. We take a look at the Dow. The leaders out here. You got, looks like it's going to be Boeing. Yeah, Boeing positive 51, 3M 23, Apple 21. And it's pretty wild that Boeing is one of the leaders, right? When they just come out with more, well.
It never ends.
Seriously, man. I mean, this has something to do with if it gets hit by lightning, folks, okay, both engines can go out. And so the FAA is, let me pull it up right now. So here it is right now. So let's see. The Federal Administration has recommended another safety fix for Boeing grounded 737 MAX jet. The proposal ought to require inspection and possible replacement of a metallic lining that protects wiring from lightning strikes, a regulator said Tuesday. The directive is prompted by a risk that both engines could be shut down if panels shielding the wire aren't properly bonded. Well, we can tell you, folks, Tommy and I, that being in Tampa, right, which is the lightning capital of the United States, we want that fixed.
Yes.
You know, if
anybody knows Florida in that time of year, man, it's just lightning everywhere.
Yeah. It dances across the sky, right?
That's right.
It really does. And yesterday, bottom line is that we had that 10-year yield break the low that was established in 2016. You know, it's higher than it right now. We're at 135.71. But if you take a look at this chart, what you're going to see up here is that the all-time low was established in the future market. This was established in July of 2016, which is 1.3180, and we got to 1.3055.
And just like that, we're back up 5 basis points to 1.35.
Yep. And, you know, we'll see where this whole thing goes. But there's no doubt that rates themselves, they're staying low. You know, I suspect.
Yes.
You know, we'll see this market crawl higher. Now, okay, so we have oil today, right?
We sure do. It's Wednesday. Yeah, we'll get those numbers at 10:30, so we can take a look
good.
next. Yeah. Because oil, I think, under $50 right now.
Yeah, so let's see. I'll put the whisper number up. And this event did not have a previous release. Oh, I get the wrong one. Hold on 1 second.
No, they're right there, number 31.
31. Okay, thank you. There we go. Okay, so they're looking for a build of the whisper number is 1.2 million. The survey's number is 2.6 million. And so we'll see where this is going to shake out. And so, hey, we're not doing bad in this. We're 12 overall in our player estimate as to what.
Yeah, I think that was last week is how it comes in at 12th. Maybe?
It accumulates them all. Because natural gas, we're not even close to that. Natural gas, we're like way down the line.
Well, hopefully we peg our crude coming up.
103. See, we're 103 in natural gas.
Yeah.
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 330, Nasdaq's up 130, S&Ps are up 32. And let's go over that oil market. So I have your charts up here, Tom.
Perfect. So we have crude oil, $50 right to the penny right now. Looking at the April contract. We'll jump in here over to commodity spreads. I'm going to refresh this real quick. Commodity spreads, crude oil. We'll start with the 11 a.m.s. The only option we really have here is 49.50 or 50.25, so we're about 25 cents away. But if you jump to the noons, we do have a 50 option from 50 to 51.50 on the bullish side. Only a 4-penny bid offer spread, so not bad there. We'll pull up the bearish one from 50 down to 48.50, and you're looking at about 29 cents on each side, which is $29, so $58. Or 58 cents away from $50 right now. You need over an hour and a half. Not bad, 58 cents. That's more than usual, maybe for the trades, but with what's going on, 50 cents either direction, you have till noon. Not a bad trade, I think.
Yeah, because just today, that's what we've moved. It looks like 43 cents will move both ways.
Okay.
Today. Yeah.
Nice.
Yeah. So
we'll see what happens, but we got oil right at the $50 mark, literally to the penny, and we get the numbers in like 10 minutes from right now.
Okay, so let's go back over to this whisper number. I'm going to go, let's see, WH.
You know what? Can I jump around? Actually, I didn't think they lined up. The daily, it's just interesting. The daily actually has a 50 to 55 as well. Now, this is really interesting just with everything else. So you got till 2:30, and you have $5 of profit potential. That one costs you 38 on each side. So you're looking at about $76.
Okay.
But you have $5, which oil could definitely move more than $1.50, where you're kind of handcuffed in the last one, and you have till 2:30.
Yeah, interesting, man.
On the day that you have the president talking at 6 o'clock about the coronavirus, right?
Oh, 6 this afternoon?
6 p.m. Eastern time.
Oh, that's a long time from now.
It sure is. I agree.
Yeah. So let's take a look at this. So go back into oil again, 31. Okay, so, excuse me. So my take is that the survey number's bigger build. What do you think?
Let's see. I'm going to be looking for cheaper oil, more of a build.
Okay.
How about 9,000.
2900. Okay, cool. 2900. That's it, I believe.
And I'm not even sure. The nice thing about buying the volatility a little bit on this trade or making that trade today is that you don't even have to necessarily be right. You're getting a lot of exposure to the volatility that's coming with the market recently with the coronavirus.
Especially on the daily one, right?
Right. Yeah.
That's 230, right?
Right. Correct.
Yeah, that's a big number, man. So we'll see where we shake out, man.
Yeah.
Market-wise, let's go over to this S&P and take a look at it. So they get the bounce going, and this is where, folks, okay, that you have to start getting used to like these big numbers, because we've been down so dramatically. The S&P right now is up 35 points, which sounds like a monster, and it is a monster, okay. But the bottom line is that we went from 32.59 yesterday down to 31.17, just to give you an idea. I mean, that's like about as intense as you can get. So
that I was just going to make mention. The low last night in the S&P is 3,091. I mean, we're 80 points off of that low, which is remarkable.
It is.
How far we were.
Isn't that crazy?
4 a.m. looked a little dicey. Thankfully, I wasn't up and awake just yet to see how bad things might have looked.
Right, and what's going to be interesting here is that the real question is going to be, okay, can this get all the way up to 32.12? That'd be a normal place for it to go. And what that is, folks, is that's the lows of the 31st of January. It's like, I want to see what this is Fibonacci-wise. So let's see. Let's see where the 382 comes in. What I'm going to do is I'm going to take the high to the low.
3,400
I
about
want to see
to that
where
low.
Look at that, yeah. You're talking 32.08. So we got a while to go, even for a dead cat bounce.
Another 40, 45 points.
Yeah.
Yeah.
And what you want to do, folks, is just keep your eye, for the next hour and a half on Europe. Because if Europe can hold, that's going to basically, that's not holding. Interesting, man. When we started this program, we had the DAX up 0.4, and the CAT was up 0.4. Now they're both down 0.4. That's.
Meanwhile, the Dow's up 300.
Yeah, no, for sure. Yeah, no doubt. Platinum. Let's go to platinum, because platinum, folks. Okay, bottom line, still hasn't been able to catch a bid. It's pretty amazing, when you do the math on what it takes to get an ounce of platinum out of the ground. It is what it is, and evidently there's just not demand because the supply, it's not like the supply is huge in platinum. It's not. And evidently the demand is worse than the supply, though, because guess what? This thing still has a hard time getting anywhere over this 1,022. Last month we made it up to 1,035, gave it up. Now it's like, okay, man, this thing can almost get back to 839, which is going to be pretty wild, man. I mean, and then palladium.
Yeah, compared to the other metals, right? I mean, gold, almost 1,700, yeah.
Seriously, and palladium, this is like the rocket ship. And just look at this, 26.44. 26.44. And the all-time high in this is 27.75.
Okay.
Just so you can understand something, folks. This has traded at $200, and if you've ever, palladium is so soft. Like, I suspect that if you watch ESPN and the real strong guys, Tom, right?
Yes.
I bet one of those big strong guys could take palladium and turn it, and that's how soft it actually is.
Okay.
And if you pull us back, what you're going to see in 2009. Okay, it was $176.
Quite a run, man.
Isn't that crazy?
Yeah. Even what's the low of 2016 there?
2016 is 451.
Yeah, that's amazing.
Isn't it? And it hasn't had a pullback since.
No.
Let's see, went sideways in 2019, but it was still at 1256, and then it just took off like a rocket ship, man. I mean. Pretty amazing.
That might be parabolic. I would think about getting out of there.
Yeah, there's no doubt. No, it is. It is
nothing wrong with taking.
If you saw that chart, folks, that is a parabolic move. And let's go over to silver. One of the targets want to know is silver a buy yet? Silver's been lagging gold in a huge way, man. Let's just take a look at it. No, this is good though. It says that, so you're back to the breakout area, 130,000. Yeah, I'd leave it alone today because you're at 66,000. You'll probably do 120, and you don't want to do that. Well, we did yesterday. We did 150 yesterday because you're coming into 130. If silver's going to get a bounce out here, yeah, but that high wants to get tested too. So if silver wants to get a bounce out here, I'd like to see like maybe 100,000 versus 130. Something is dramatic as a pullback that's showing that the sellers aren't there. Stay right there, folks. Tommy and I will come back. We're going to have that oil numbers for you. Dow Industrials right now trading up 337. We get the Nasdaq up 140. S&Ps are up 35. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 320, Nasdaq up 141, S&P's up 33, and you talk about a build. Holy cow. This is a build and a half. I think it said 4.2 million. Let me find this thing again. Yeah. Crude inventories rose 452,000 barrels.
Okay, that makes a little more sense. So a little bit of a miss there for sure.
Yes.
The number was about 2.6 million they were expecting for a build. The whisper was lower at 1.2. And I had crude up. Crude was jumping a bit, about 20 cents. It got a pop on that news. Pretty muted action, though. Checking out the chart, I mean, we were right at $50. We initially jumped up to $50.20, but we're back at $50.09.
Wow.
So I think the market basically saying, you know what? All we care about is this coronavirus story over the next week, and to really try and figure out what it's going to do to the global economy.
No doubt, man. I mean, look at these numbers. As we said, the estimate was 2.6 million billed, only 452,000. Gasoline, the estimate was minus 2 million. They got minus 2.6 million. Distilled, which would be diesel. You know, that's interesting with diesel here, because that was also a big draw, and you know, diesel has to do with planes also. But you know, someone's using it. It's a minus. They were looking for a 1.5 draw. They got a 2.1, and that's pretty amazing that oil can't move, and the draw was that dramatically different.
It is, and I have the chart up again, and we're actually down 49.95. So we're now 5 pennies, 6 pennies under where we were trading at before that number came out.
Pretty wild.
One of the benefits that we talked about of getting that 230 spread potentially is that, you know, the market is just so volatile right now, even without the news. That might be a bad trade just based on the coronavirus volatility today, ahead of the president speaking tonight. What is he going to say? Is he going to reiterate some of what his officials said yesterday, that it might be coming? And
how about
some
Larry
pretty
Kudlow?
strong.
If you heard Larry Kudlow, folks, okay, this is the ultimate and basically, you know, fake news. He said that they've done a great job containing it. You got to hear this quote, because guess what? It's your health, and you better understand what's going on.
I would agree.
He's going to get hammered on that thing, man. That's
as he has been, for sure, because that is not the truth at all. It's one thing cheerleading the markets, but to talk like that as, you know, a senior economic advisor for the president, you got to be careful.
Yeah, it's just like that's your health, man. I mean, it's like crazy. And what has happened, I mean, it's not like it's even here. So how do you contain it? You know what I mean? It's like,
well, it's just on the day that literally you had, you know, CDC officials saying, you know, people need to become prepared that it's definitely possible, if not likely.
Right.
Yeah.
Wild, man. Let's take a look at some of the higher volume equities out here. Actually, you know, I want to go to Amazon first and see what's going on with Amazon, because I'm
always up for going to Amazon.
No, totally, man. Okay, so Amazon's up $36. It's, you know, it got into the gap yesterday, and it's going to be dangerous, Amazon, folks. Amazon got it down in 1952. The close of the gap is 1872. You know, so now it's trying to get back above it, and it is right now. It's back above 2002. You know, we'll see where that shakes out. But Amazon certainly yesterday, man, had a lot of news coming out. I mean, those new to-go
yes,
grocers.
The cashless stores, yes.
And those, you know, were all over the newspapers today. I mean, what happens, you know, the Tampa Bay Times.
Maybe as they should be.
Yeah,
you know,
the Wall Street Journal, the New York Times, they all had it in it, you know.
You know what I was thinking about the other day was, and it was yesterday at some point, they're cashless stores, right?
Yes.
That's going to be something that it's going to be in our future, that you're going to have cashless stores with just robots taking your orders. And you can actually say yesterday was the first day that happened, and that's definitely like the future, you know? Like someday in the future, they'll be like February 25th, 2020, the first cashless store, you know, and people will be like, wow, they had people in there before then?
Yeah, so can you picture this, folks? You'll have museums, right? And the museum will be an old grocery store with people filling bags.
Exactly. It's a pretty marquee date when you think about it, you know? The same way we're probably going to see in the next 10 or 15 years, the first fully autonomous driving car, you know, and that's just going to become the norm. Yeah.
It's, you know, and that's so hard to wrap your head around.
It is. It is. It's almost, you bring it up, you say, what are you talking about? But in the future, it's going to be like driverless cars. Before we had driverless cars, you drove your own car, you know, and there were accidents that killed 10,000 people a year because people couldn't do it. That seems ridiculous, but it's just going to be something that's history.
Yeah. And I think, folks, if you can do it, if you want a really long-term investment, is get yourself for one of your grandkids, a really nice car, brand new, put it in the garage, a gas-driven car, put it in the garage, 50, 70 years from now, when they're like 75, I suspect that'll be worth a fortune, because gas-driven cars, I don't think are going to be around much. Do you know what I mean?
I would. The collectibles are really going to become collectibles when, they're just made for that reason.
Yeah, wild. So let's go over to the ExxonMobil. You know, we get this equity has been getting smoked on a continual basis. Still can't get any traction. You know, you're up 36 cents, and we put this back here, and what you're going to see is, you know, we've been talking about you're back like 20 years already.
You sure are.
The real problem's going to be, you know, let's see. Yeah, we're at it. I guess it's under this number. It's under the 56.51.
It's under everything.
It is under everything. And this is pretty intense, folks, because, you know, picture an ExxonMobil. People that buy an ExxonMobil, you know, you can keep this for like 30, 40, 50, 60 years. I mean, you know, you're paying a good dividend, right? You're in a little business. Well,
Sure.
Anyone that's bought it from 2005 now is in a losing position.
Yeah.
That's a big number. That makes a difference. Now, over the course of time, I bet, you know, they've made pretty good money on dividends. But guess what? Things do change. And look at this. The gross dividend right now on this is 6.38%. Yeah, that's scary. It's actually it's scary, folks, because you don't see markets with that type of dividend. And normally what happens is that you get more destruction, and then at some point they got to cut back the dividend, and then overnight.
I would agree. I was going to mention it myself, and even it's been, you know, going back that far, but it's been so fast. Even whether you look at it from January of 2018, you were at $90.
Yep.
Or you look at it even in September, you were at $87. So September of 2018, we're talking about a year and a half basically in ExxonMobil. You just went from 87 to 54.
Right. Pretty.
Because you could have went into that for a yield, right? Maybe that's one of the conservative parts of your portfolio.
Yep.
And you just dropped $32 on an $87 stock. You're talking about 25% of your capital you just basically lost from the end of 2017.
Right. And you're crossing your fingers that, you know, the bottom line is that there's not going to be more alternative energy going. And one of the biggest things that are also happening, folks, is that we have more people in the world all the time. But what's happening in cities is that, you know, the Uber phenomenon, the people, you know, basically are running around. They don't need as many cars, man. I mean, that's the bottom line.
That's the one thing. I mean, we spend so much on our cars, and they all basically sit being unused all day. And when you think about the amount of your income you spend on a car and it sits unused all day, that's going to change.
It is going to change, because once you do the math on it, you're like in shock.
Yeah.
Right?
And exactly. Yeah.
Dow right now up 384, NASDAQ up 163, S&Ps are up 40. Stay right there, Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 408, NASDAQ up 161, S&P's up 43. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at Forex-trading-unlock.com. That's Forex-trading-unlock.com. Teddy Cakestad, what's going on?
We got a lot of volatility in the U.S. dollar today, actually this week so far.
There's no doubt, man. So, what do you think? I mean, it jumped in that higher trading range, and then it didn't hold last week.
No, but I'll tell you what, the yen, how about, remember last week when we talked last week, we had that big explosive move to the upside, and we were heading towards our, the target of $1.12 or 112 to 112.5 that I've been looking for a while. I didn't think it was going to happen for at least another month, and we fell back pretty strong, but I think that we had a nice bounce yesterday, and I think you're going to see this bull continue, especially with the way gold sold off yesterday. Yeah, no, it's interesting. So that, and what was interesting, Teddy, is that Tommy and I were talking. We were actually on the air and off the air. I was so paranoid of that, 110.5 in the yen. But guess what? That didn't stop gold. I mean, gold went to 1691. Do you know what I mean? Right. Gold did what it was supposed to do, and then you get a pullback. But I thought that was so intriguing because that was the first time in quite some time that it didn't hit it when it was actually at highs. I mean, it got hit yesterday, but by then the yen had already pulled off. So, Right.
Pretty wild.
So the U.S. dollar yen bull, I think, is definitely proving that it's not going anywhere, even though the dollar seems like it wants to kind of, I think the coronavirus, it may not, I wouldn't say it's overdone, but it's heavily factored into the marketplace, and I think that the volatility, especially we've seen in the yen, is starting to show that we're going to really see some really big swings, because I think the interest rate market might start to get some moves as well.
Yeah, well, we had the 10-year, break all-time lows yesterday, right?
Right.
So that's going to be intriguing in itself. And, of course, market-wise, we get a little bounce out here today. Some of these, not necessarily third world countries, but some of these emerging market countries, their currencies have got actually smoked, right?
Well, what's funny is I've been talking about the Turkish lira to some people for the past week and a half about, now most people don't look at the Turkish lira, but it's a really good indicator about what's going on, especially with the Middle East and stuff like that.
Yeah.
And now with the coronavirus exploding in Iraq and then, Iran, and also moving into Pakistan and stuff like that, it's definitely impacting the Turkish lira. And if you look at that chart, anyone does look at it, it's been trading higher for months on end, actually. But it's a wide trade. If you trade that market, the spread is really wide. It would be it's trading, what is it, like $6 something. It'll be like a 40 pip wide spread, you know. So to trade that market, getting in and out, you really have to be on the right side, you know. So, but this one, I'm telling you, like right now, if you're a skittish bull, like buying into these highs is something that's really rough with their volatility. But this market could be 20% higher in another 6 months, literally, with the way things are going.
Well, and the high is 7.23. So I'm looking. That's what, 2018, right?
Right.
That's a weak lira, right?
Very, very. Yeah. And I think it's going to continue, especially, I mean, you know, the Iranian prime minister, not the health minister, whatever, yesterday said that the coronavirus wasn't going to be a big deal in Iran. It's contained. And then today they find out he has it, you know. So where is that for stability there? And I think that's definitely going to, you know, like you said, like some of our lesser currencies versus the dollar, they're getting smoked. And I think they're going to continue to get smoked for the next couple months in a very, very big way. But you have to be ready for that volatility and have to be able to bear that risk as well.
Yeah. And folks, if you want to see something what Teddy just brought up, okay, about that minister, if you Google that, you're going to see when he was saying it's contained, he's coughing, he's got a handkerchief off, he's wiping sweat off his brow. That's one of the weirdest things I've seen. Meaning, you know, we know that sitting up there blatantly lying, and he's sick himself, man. But when you see that video, it's crazy. So look at the British real. Not that we do that, but I mean Brazilian. Brazil is a monster commodity country, and like, look at this thing, man. Right? It's blowing my mind, man. I mean, we're at 4.39 real, folks, to $1 US. So I think this is all-time lows. Let me find this out for a second. It is.
And I think you're right that these trends, especially in emerging markets like these, they're going to continue, and they're going to be very aggressive for the rest of this year, I think.
Yeah, wow. I wonder, like, now, when you're looking at currency markets, what the fundamental reason would be that they're getting so weak because their economies are weak. Would that be correct in correlation to the other currencies?
That would be typically what I look at for sure. And now, especially that now there's the factor with the coronavirus that you put in as well as a big fundamental.
Right. Yeah.
So, you know, and that's also with trade too. Like, we don't know how the real impact is going to be yet for another like 3 to 6 months at least.
Right.
You know, so, and then look at what happened now with Italy. And like, this is pretty scary. I mean, they I know that they brought people in, but in one day they went for an extra 200 cases or something like that in this one town in Italy, you know. So that's, if this is not contained, and I mean, they already cut off the rail lines between Austria and Italy. If they start containing the countries within the EU, I mean, talk about a nightmare. I mean, we're not containing our borders between our states and the United States right now, and that's equivalent to what's almost going on now over there.
There's no doubt. And unfortunately, folks, you know, Italy, we're almost in March. Anyone that basically is, you know, going to Europe for the summer, you know, for a week or whatever, this is going to impact them, because this is kind of when you'd be planning, because hotels are so expensive, basically. You know, if you're planning to go there, you'd be planning right now, man, unless you had a multi-billion, millions, and say, okay, I'm just jumping on the plane. But that's gonna hit quite a bit, man. I mean,
right. Well, you know what's funny is, like, I was in the S&Ps for years, you know that, and transportations are something stocks are what you always look at as a major indicator for the S&Ps. And I think the transportation stocks over the next 6 months, we're really going to see, like, as the travel agencies start to get hit. I mean, think about this. You just discussed this trip. Even if you can get a good deal because of what's going on, what happens if you end up going to Europe and all of a sudden there's an outbreak and you get contained for, I mean, you're not going to be contained for just 2 weeks. You could be contained for a month. Yes. And then when you do come back to the U.S., you're going to be in quarantine again for at least 2 weeks to 4 weeks.
That's intense.
You know?
Yeah.
Could you imagine if you were on a budget and you actually went on a trip like that? You could go from being just treading water in life, going on a trip, to having devastating your whole life financial situation.
No. And hey, listen, something that, you know, actually we forgot to bring up. What they did last night in Hong Kong. Did you see this, Teddy? In Hong
What's
Kong,
that?
If you're a resident of Hong Kong, folks, they gave every resident 10,000 Hong Kong dollars. Yeah, every resident. This is like, I saw this coming across the tape. I'm saying to myself, wow. I mean, that's an indication of, like, how bad things actually are, right?
Right,
I mean,
absolutely.
That's pretty intense, man. And I can see why they can do it, because it's kind of what you just brought up. If you're shut down, well, you need something to live on, right? That's
Right.
the real bottom line, man. Crazy.
Absolutely.
Yeah.
Now, what happens in some of these smaller countries? I mean, like, we see what's going on in Iran. Like you just made this comment about we were talking about this the health guy.
Yes.
What about some of these other countries in Africa? If this really spreads, now we don't know how it's spreading through Iran and with their borders. We know Pakistan locked up their borders and stuff like that. So we'll
Crazy.
see.
Hey,
Absolutely.
you have a great one, safe one, Teddy. Look forward to speaking to you next Wednesday.
Absolutely. Hopefully the video works.
That will.
Thanks, guys.
Come right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now at 413, Nasdaq up 169, S&P's up 44. So that's pretty wild, Tom, isn't it? So I got this article up right now. First, a political party came across saying they think they should give it out, and then last night, Financial Secretary Chain announced that Wednesday that the government is going to give all adults, permanent residents of the city, Hong Kong, $10,000.
Yeah, and that works out to like just under $1,300 US.
Oh, so it's 0.13, huh? Interesting. Okay.
Yeah,
so what is that?
$1,282 at the current conversion rate, 0.13.
Yeah, you need
not a bad handout.
Not bad,
for
but
when
you
you
need
talk
more than
about
that, I
everybody.
think. Yeah.
Hong Kong already dealing with problems because of civil unrest over there in terms of GDP shrinking ahead of this. So really probably feeling the effects of it.
Oh, yeah, that's the payoff to keep people off the streets for a bit. Yeah, interesting, right. Which would totally make sense, right? Yeah.
It's just that they're dealing with their whole a whole other barrel of worms, on their own. So it's probably double whammy in terms of dealing with that. The protests, the civil unrest, and then you have coronavirus that's going to affect Asia everywhere, from everywhere.
Yeah, no doubt.
I saw one cruise line this morning, I think it was Royal Caribbean, canceling like 30 cruises to Southeast Asia. And I said to myself, just like we were talking about with Teddy, who is willingly trying to go on a cruise? It's one thing if you have it booked and you have to make that judgment call if you're just going to waste it if they haven't canceled it. But who's actually booking? They canceled 30 cruises, let alone to the Southeast Asia. I just imagine that it's just demand has to dry up for that type of travel.
No doubt. And then, listen, in Europe, like our football season's over, but in Europe, soccer. Think about that. The soccer stadiums, 125,000 people.
You have the Olympics in 5 months. I don't see that happening in any capacity, if even resembling what they're usually like, even if they do put them on. Empty stadiums in some soccer games because of this.
Crazy. Stay right there, folks. Think of Swim's coming up next. I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Wow, go get them, folks.
Larry